We're thrilled to have you here. We're thrilled to have our guests here talking about the future of fintech. Oh, just that little story. But before I go on, I do want to first pay my respects to and acknowledge the traditional owners of this land. This is Gadigal country in Eora Nation, and I would like to pay my respects to the elders past, present, and emerging. And this will always be Aboriginal land, and we will respect that. I also want to highlight a couple of other things. One is just a little self-plug. We do have a fabulous new scale-up hub happening in Sydney. If you haven't heard about that, you will today. Where's Adam? He's around here. There's Adam. Have a quick stand. This is Adam. If you want to talk about your scale-up or your friends or neighbors, moms, dads, scale-up, talk to Adam about places in the scale-up hub. They are going quickly, but it is a pretty impressive facility built specifically for scale-ups in emerging tech. Feel free to check out the website and talk to Adam and the team, and they'll tell you all about it. I would also like to thank our sponsors. We always really appreciate that as a non-for-profit organization. 1835i and Chartered Accountants Australia and New Zealand help make all this possible. Thank you. I see some t-shirts. For the rest of you that might be out there, we really appreciate it. So let's talk a little bit about fintech. Some of you may know that Stone & Chalk was born out of fintech. We existed initially to help drive a new ecosystem supporting the fintech community here in Australia, and particularly starting off here in Sydney. Fast forward 7 years, and we're firmly ingrained in Sydney, Adelaide, Melbourne. We now have offices in Canberra, Perth, Queensland. We're looking at others as well that are about to expand. Tasmania, we have an office there. And we're firmly also extended beyond just fintech into all emerging technology, in particular cybersecurity. But today we're going to focus really squarely not only on fintech, and certainly not on the past of fintech, but on the future. Where's it all going to go? I cannot wait to find out the answer myself, and let's talk to some people who might be able to help us. First, we've got Fred Shivesta, founder of Finder.com. If you haven't seen or heard of Fred, you need to get out more. Australian-born entrepreneur, advisor, international speaker, founder of the global fintech Finder, which has probably been around as long as anybody in the industry. So really excited to hear more about what Finder's up to now and where it's going to go. We also have Apurva Chiranewala, general manager of Block Earner, and I will like to point out a former Stone & Chalk resident, as is Nano. So we're really excited that 2/3 of our panel was born here. Really exciting. I think that deserves a little bit of round. Apurva is well known in the startup space, obviously just because he came out of Stone & Chalk. He's played a critical role in the success of several growth startups and still involved with more than one. He's currently the global GM of Block Earner, one of Australia's first crypto-based holistic banking solutions. So if we want to talk about future, certainly crypto is part of that, and both Fred and Apurva can talk to you at length about that. It'll be interesting to see if we can get them to argue live on stage. We've also got with us Vanessa Fletcher, CMO of another alum of Stone & Chalk, Nano Home Loans, Nano Digital Home Loans, sorry. Yeah. I can't screw that up in front of the CMO. That's correct, that's correct. But that was the Emerging FinTech of the Year in 2022, so pretty impressive credentials coming to the table here. Vanessa herself has extensive experience in large functional marketing teams, and in fact, I think just helped set up an HR group as well, partly as part of the responsibility she has to do. And as Chief Marketing Officer with Nano, she's been instrumental in building the brand from start to where we are today, and joined right before the launch, I believe, and had to get the brand out pretty quickly. In a couple of word headlines, I'd love for each of you just to tell us what your business is about, and then we'll go into some detailed questions. Let's go in reverse order. Let's start with you, Vanessa.
Cool. So in a couple of words, Nano Digital Home Loans is a technology company disrupting the home loan industry with its first innovation, a digital loan origination platform, and we are giving borrowers unconditional full approval in under 10 minutes.
Ooh.
Game changing.
Apurva.
Cool. So Block Earner is essentially building banking 2.0 on crypto rails. So think of everything that you can do with your bank today. We want to do that not just using fiat, but also using crypto. And we're just starting the journey on that front.
Excellent. And Fred?
So Finder is a fintech, I guess. I would love to be a Stone and Chalk alumni, but I think we were on this street before there was Stone and Chalk. We were like part of the Stone as well. I don't know. And then
You can be an honorary member.
Honorary, there we go. Okay, we're in the club now. And we started off helping people save money by comparing products, and now we started building services that help people make money. We've got Find to Earn and our trading system, and we've got a whole series of other things coming as well.
We'll dig into that a little bit. I'm just going to show my age here a bit. So let's start by thinking forward, by thinking back. The fintech journey in Australia has been pretty quick, pretty monumental, and pretty well documented globally. I think we've done an amazing job. Over the past, let's call it 10 or 15 years, I'd like each of you to tell me what you think might be one standout moment in the fintech evolution here in Australia. Who wants to go first on that?
Cool. I don't know if it's one thing, but I think when I look back at the last 10 years, there's 3 key trends, and perhaps this is a good starting point. The first thing is just the sheer volume. Like in the last 5 years, we've more than doubled the amount of fintechs in Australia. I think it's about 850, contributing to 4 billion in revenue, and that's growing. What that shows us, though, is that there's still plenty of consumer problems that need to be addressed, and plenty of disruption that's still to come. The other big thing that's happening is that Australia is selling the technology onto the global stage. So Afterpay is a good example of that. And I always joke that at first the world took our actors and now they're taking our fintechs. So this kind of amazing incubator at the bottom of the world producing amazing technology. So that's 2 big things. And the last one, and definitely what we're seeing in our space, is that fintechs aren't necessarily standing up against the incumbents, but actually now enabling the incumbents. So we're working together to produce better consumer outcomes by working together and not necessarily just standing against them.
That's a really interesting point, and we will get to that one a little bit later as we talk about some of the upheaval in the industry, but really interesting to know. And you can compare this a little bit perhaps with the evolution of Uber, where everyone thought all the taxis would go away when Uber showed up in San Francisco, and it turned out more people just took more rides, and so it lifted all boats in that industry. And I think we can say the same with fintech.
I was just going to add, I want to contextualize. I actually think banks, the traditional, I don't know what's traditional. Banks were the first fintech. So ING, I reckon, was one of the first fintechs in Australia. And if you go back in time, I used to have a passbook. Like I used to go to the bank, have a little piece of paper, and I'd put money into it and take money out, and have a checking account with a check. And actually, America's still got a lot of that.
Yeah, we still have that.
Sorry, apologies.
We're behind the times on more than just that.
So let's think about the first fintechs. So banks in Australia actually, I think, did a great job. They built apps. They built stock trading, Echo going on. I'm sorry.
That's me.
And I just think we should honour that, because those rails and that idea was actually pioneered by them. And it took the step in doing that. So I think that was the first thing. When banks started making apps and closing branches to some extent, I think that was a big deal. Yeah. I think the second thing is that's really started this movement a lot right now is the issue of banking licenses and new ones, provisional ones. Sure, that hasn't worked out the best, but there are certain ones like Cuscal that I think have done incredibly well, and I think they're actually supporting a lot of the fintech and actual ecosystem. I think I'm waiting for that, like in America it's got Signature Bank or Silvergate. That kind of hasn't quite evolved here in Australia yet. Who is that of? And maybe it's Cuscal, maybe it's not. But I think that was the moment where now you can build onto new rails and you've got new evolutions and new wallets starting to come about. I think that was a key moment in time.
That's cool. Apurva.
Yeah, so firstly, I strongly agree with both my fellow speakers. One interesting thing in this space, and frankly, I don't have a long history in fintech yet. I come more from an e-commerce and tech in the e-commerce side of things. But what's interesting is Australia has traditionally punched above its weight when it comes to global fintech. I think once a trend starts to show, you typically see very clever, intelligent solutions from Australia jump to the front end, as just heard, also become global players really quickly. So that's credit to this market. That's credit to some of the entrepreneurial spirit in this market that we should probably take note and build confidence from. The big trend in the last 10, 15 years, or something that happened, it was more global. I think the GFC, coming from the blockchain space, I would say, was a very critical moment in the history of finance where I think there was a fork in the road where there was a choice to be made whether if you're going to settle with existing infrastructure, policy, and centralization of finance, or will there be entrepreneurs out there and engineers out there who are going to try and see if there is a better way of doing things? And I think that sort of seed was planted in 2008, 2009. Although in Australia, we escaped that to a large extent thanks to mining and boom in the resource space. But I think we saw a knock-on effect of that in the subsequent years with a lot of money printing. So I feel like there was an element of that in a macro picture that triggered a lot of innovation.
So let's explore that for a second, because as a transplanted American, 20 years now though, I'm truly Aussie, I just don't sound it. You hear this expression a lot, we punch above our weight, and it's true in a lot of cases. Why do you think that is in fintech? We certainly have lagged behind in other areas like climate and climate tech. Why fintech? Why are we so good?
So I think if you look at the last government, they pushed through CDR into law, so the consumer data, right? Putting something into a law is hard. It's a long journey. You've got to get a lot of votes. That's something that just puzzles me how people do that. Even more in America, but anyway, that's a whole other thing.
They just don't.
They just don't, yeah. So I think that was a key point. Let's go backwards a step. There was one thing before that, which is positive credit reporting. Positive credit reporting, like negative credit reporting is what we currently are used to, but it's moving more to the American and UK system, and that was probably, again, that first change which started. It's not fully there, but positive credit reporting, I think, is another key moment. I think the next thing, so you've got good government support of that, so that creates a good fertile ground. I think the next moment right now that I think will create a Cambrian explosion of more fintechs will be initiation of payments.
Yeah.
So this pay-to system, I'm sure everyone's had a look at, I think it's been experimented on, but I think that the government has actually put the work in, put the infrastructure, and actually built things. You look at India's incredible in terms of its payments. Like you look at PhonePe, Paytm, it's amazing. Its ID systems, that to me is like benchmark stuff. I think Singapore's close there, but I think India is like incredible in that sense. And I think this is where we'll start to get apps where you don't have to go back to the bank. I think that's where you start to really lift off, and we're going to start seeing some real... If you can't make payments from your app, it's pretty annoying, and it doesn't quite complete the loop. And I think, like Apurva, you were talking about that banking future where you bank outside a bank, I think that's that next level.
Excellent. Great. So anything to add?
I just wanted to second what Fred said from a regulatory standpoint. I think there are two factors why fintechs in Australia, I think, outperform or punch above their weight. One is we are an affluent market. It does give us a little bit more tolerance to risk. There is a lot of the fallback if you go into markets which are not necessarily as affluent as us. I think the cost of going wrong is really high for the entrepreneur that's taking a punch in that space. Whereas if you have the systems built in, there's safety nets built in, you can be more entrepreneurial in a rich market. And this is me coming from India, sort of articulating that from a market where you don't have any social security and so on and so forth. But the second more important piece here is we've got a very balanced regulatory framework. I think it's often criticized to be slow. It's often criticized to be, there's so many criticisms for the government that you can have in any market. But at the same time, if I look at the global picture, and again, coming from India, I can tell you that it's lagging behind when it comes to fintech regulations. I think there's a lot of prudence and balanced approach to regulatory frameworks. So there is a little bit of credit to be given to the government that allows for fintech to thrive. They don't shut it down too prematurely.
Terrific.
And so that's a good credit.
What that tells us is this is the best place and the best time to be in the fintech. Good panel to be joining, and a good time to be a fintech if you're one in the audience. So let's shift gears a little bit and talk a little bit more about each of your companies, what you're doing, and how you're contributing to the future of fintech. And we'll start with you, Fred. Finder's different today than it was when it first started in, 2002? What's the core business today, and where are you going with it?
Yeah. You can obviously, I wrote a little book, I don't know, it was something to do during COVID, so you can read it like a deep story if you want. But 2006, we started just experimenting, and Credit Card Finder was our first beginning. So we really came from real content, SEO, that's what people knew us. And probably for about 5 years we compared credit cards, and that's not really known. And then probably another 3 years we just kept our head down and started comparing more things. And then we went overseas. I think that was to the US, UK, Canada, and now in many different countries around the world. And that business is a good business for us. And I think we will continue to keep building that. I think in about 2017, 2018, we started experimenting with cryptocurrency. I personally love cryptocurrency a little bit. It's fun. And I think what I try and do in that is try and grow the pie. So I think crypto is actually a small market, like relative to other markets. It's still quite nascent. You get into these echo chambers and you think the market's really big, but you realize you're speaking to the same people over and over again, and then you realize it's really small and no one else knows what you're talking about, and that's when you realize I'm in an echo chamber. And I see my role personally to try and grow fintech, grow cryptocurrency, and grow its awareness and what's possible. I think with Finder, you've built this new earn product, which is really cool. It's obviously a big step to us. People are actually giving Finder money, which is a big step for us. And then we started to take out a lot of the bumps that are in the way. So we realized that there was a segment that came to Finder and they were very advanced users. They were like really into comparing and like deep into like products. And that's a certain interesting segment, right? They take their own matters into their hands. And there are people who just don't care. Like they're just never going to be a customer. And then there are people in the middle, we noticed they were like, interested, but it's a bit hard. And it's fair, get a MetaMask and buy some crypto and don't lose it and store some keys and whoa. All those words are pretty complicated. So we try to build some products now. You can buy crypto in 3 minutes on Finder. So you literally download, I'm talking KYC, deposit money, buy, all done. And we've seen a record, I think it's under 2, and this is just normal customers, right? Yep. And that's the customer that we really try to go for. There are lots of advanced services that are out there, and we just think the underserved market that we're trying to target is the new customer interested, but doesn't want to go like full hardcore Binance, per options with the forward contracts and like next deep into different chains and Avalanche and DeFi. That's not our customer. And if they do want to go there, like there is Finder and you can go deep into that through exchanges and content. And there are a lot of experts that write about that. And our real mission from here is to keep helping Australians save more money and make more. Pretty simple. And we've always been doing this the whole time. I think the opportunity now, but what I've noticed, just talking not about Finder, but just market-wise, is I think there's a vibe shift. And that vibe shift, it was like everyone was a stock trader in 2020 and 2021. Everyone was a genius. Literally close the eyes, put the money in, press the button, you make money. That's like everyone. And now when the market goes down, everyone feels it. They're like, whoa, maybe there's a bit more to investing. And so what I think now has happened, and what I think the audience that we're interested in is people saving money. Costs are going up and energy prices are up. That's like, it hasn't quite gone through the system. I feel like in Australia, I reckon September, October is going to be intense. Really intense time for Australia. There's a lag, and you look at all the indicators from the government, I think that's nice. I'm talking about, we see real data of what people are doing right now, and I can assure you that there is people taking out loans, and there are people who are taking out credit right now. They are preparing for pain in a short-term sense. And why would you do that? You need access to credit because you need to go through a dip. People are forecasting and preparing for a dip. And I think that expectation tends to lead to reality and then things start to happen. And I think that vibe shift, I think what products there were before were all about growth. And now I think it's going to be a lot about saving, optimizing, discount stores are going to be big, bringing back the deal. Where's the deal gone? Bring the deal back. I think that's the sort of trend I'm noticing.
Cool. Apurva. Let's talk a little bit about Block Earner for a second. Tell us a little bit about why you got started in what you're doing, and how do you think you're going to help transform the industry?
Okay, I was just going to vehemently agree with a bunch of things Fred said. One thing I would just want to say before I go into my why I started at Block Earner piece is our thesis on Block Earner is a lot of the things that Fred pointed out is very similar. In a weird way, we're both as two different companies on a very similar mission. And what we think is happening is 95% of the world hasn't quite woken up or appreciate the power of Web3/blockchain tech/DeFi, depending on what element of the tech you want to look at and focus on. And there's a big education piece to that. And we're all trying to be a part of that education piece in our different accents, in our different ways. Yeah. And we think as more and more people start to wrap their head around this, I think we're going to start seeing a much more democratized financial system as we go forward. So an overarching thesis that I think all of us are working with. So while externally we look like competitors to a lot of people, Fred and I were chatting just before, and we were like, we're essentially trying to do the same thing. I think there's 95% of the market sitting out. We need to first get them educated, and then, we'll compete at some stage. Anyway, so just coming back to your question. So what's interesting is, so I used to be in the strategy consulting space back in 2006, 2007. And there was a moment in time when I had my own little startup doing completely different things I don't want to talk about today.
We know how that ends.
It's its own story. I had to shut that down back in India for reasons very specific to Indian ways of doing things. And then I had this moment where I was like, what do I do next? I've destroyed my career. I've had this startup. I don't know where to go. And so I was just chatting with other founders, and they were my clients from the startup that I was running. So it was a startup focusing on marketing side of things for other startups. And so one of the founders said to me, hey, if you're doing nothing, while you figure out what you want to do, would you want to come work for us? And that was one of India's first e-commerce business called Snapdeal. And at the time, there were like 10 people and just doing what Groupon does.
Yep.
And Kunal told me, hey, we're thinking e-commerce might be a thing, but we don't quite know. So do you want to just take that as a separate project? Here's $10,000, and let's figure out if it becomes a thing. So coming from strategy consulting, I had that background of running projects and so on. So I dabbled in that. And long story short, within 2 years, Snapdeal became a thing. It became one of the first unicorns coming out of India. SoftBank made massive investments in that very quickly and so on. And we suddenly had something that we didn't realize. So from 10 people, we went to 2,400 people within a space of 24 months. And in markets like India, that can happen. It's not unheard of. So anyway, long story short, what I did see was that moment where it was clear that e-commerce is going to become a bigger part of global retail. And so there was a point in which there was like, drop everything, focus on building this ecosystem, because this space is going to keep growing. Fast forward about a year ago, there was a similar epiphany where blockchain technology and blockchain finance tipped over to a stage where you could almost see the same things happening that I saw in e-commerce at the time, where there were enough naysayers on the side that were just poking holes at the tech and saying, look, these are all a bunch of problems with this and it's never going to work. But for me, I had that feeling in the stomach where you're like, this is the point at which you drop everything and you start focusing on this. And yes, it's going to be hard for the next 2 to 3 years, maybe 5 years. But eventually when people get it, and eventually when there's going to be momentum, it's going to be an industry where you want to be the first 100,000 people who was building something. So it was a very simple thesis for me. It's just I've seen it happen before, and I just want to repeat that because the other industry I was a part of is already well established and it has a lot of talent to it.
Classic serial entrepreneur story. You just recognize the patterns and you go after them. So Vanessa, let's talk a little bit about home loans, and let's talk a little bit about Nano and what you're doing. I'm interested in understanding what makes Nano different. What's the problem you solve in the marketplace, and for who do you solve it?
Yeah, cool. Okay, first of all, it's been sounding a lot like a crypto conference, so I just want to say that my COVID hobby was trading crypto for the first time. I made $11,000 last financial year. I declared it on the weekends to the tax department, so thank you, boys. Now onto the customer problems we solve. Look, when you think about mortgages, what comes to mind? And I'm sure there's plenty of people in the room that have tried to buy a home or refinance their existing home loan, and the words like confusing, long, onerous, paper, frustrating all come to mind. And we took this problem and saw kind of two key distinct areas we were solving for. There's a consumer problem in all those words, and there's a business problem in all those words. Taking the consumer problem and looking at some of the data that we've seen, on average, it takes about 3 weeks to get a home loan approved, which, when you're looking at some of the settlement periods, is too long. 1 in 3 of customers in this research told us that they feared they were going to lose a deposit based on the time it took to get a home loan, and 1 in 5 actually did lose a deposit. So this real stress and anxiety in the process, and the fact that it's so onerous on the customer to navigate a complex system and do the work, definitely was ripe for disruption. From a business perspective, we're in an oligopoly, and there isn't much motivation for that oligopoly to innovate, or there hasn't been up until now, because their market share is there regardless. And whether they innovate their technology or not, the kind of old infrastructure and old tech debt they carry is very safe and very stable, and then by nature, they will get a considerable market share. But what they do have is high origination costs. So I think the cost to write a loan is about $3,000. So when we saw these kind of two consumer problems, we thought there is a way to address this. And it was through a rapid and seamless lending experience where we could not only give a customer the ability to complete an application in 10 minutes, but we could also do the decisioning in parallel using data, ingested third-party data, as well as automated credit decisioning and serviceability to give an answer in real time. And that eliminates not only the stress and anxiety that consumers feel, but offering this technology to other banks helps them reduce their economics and deliver their customers a better experience.
But it's not just about consumers, is it?
No, not at all. So we went to market with our B2C offering, and it was great, right? Because we went to market with a big bang, and we were able to prove not only that our technology could do it, but that the market was ready for it and that consumers wanted it. And we see that verbatim back in our kind of customer reviews. Speed and simplicity is often quoted back to us. But then what that enabled us to do was to establish that there was a new service standard in the industry, which is time to yes, right? Like interest rates are rising, the price is no longer a differentiator. Service and the ability to give consumers certainty quickly is what will differentiate brands, and it's like a must-have to compete. So with that, then we were able to start growing our B2B business. So we recently announced that A&P is using our technology. We've partnered with them, and they haven't chosen us because they were slow to innovate. They actually are quite innovative in their own and see partnering with us as an extension of that innovation to give their customers a better digital experience as well. And we've got more big banks to announce later this year and a global partnership that will see us take our technology overseas.
That's pretty impressive. Very exciting times. So much going on, obviously, and this is just a tiny sliver of the whole market. What do you guys think is next? Let's fast forward. We're 10 years down the road and look at your businesses, a space you play in. What do you think's next? What's the big pressure wave that's going to hit us that will allow us to say, okay, that was the time of the early 2020s. Now it's 2035. What's happening? What's different?
We're still probably going to be on York Street. By the way, I'm just naming this place so everyone knows. I've renamed this street. It is now New York Street. This is where we're at. We're building this. We are the tech companies building New York Street.
As a New Yorker, I'm totally down with that.
That's right.
Although your hat's the wrong New York team, sorry.
You can choose your team, I choose my team. I always build my own team. I think on New York Street, we're going to create some incredible companies, and we're going to actually change the way a lot of things are done. I think crypto is going to be normal in 10 years' time. We don't talk about POP3, we don't talk about TCP/IP, we don't talk about www anymore. It's just the internet, and I think crypto will be the same thing. A lot of these rails, a lot of these things are going to get sorted out. There's a lot of problems that are being experienced, but if you look at the problems, they're the exact same problems that happen with the traditional financial system. So the current one about Celsius and those kind of things, if you go to 1907 and read the banking financial crisis, it is literally the exact same thing. One bank took down the other banks, and this system, this contagion started, and that's what created the Federal Reserve. You go back in time, everyone talks about all these stable coins and all these things. If you go back to 1694, when the Bank of England was created, there were many currencies in England. England had, because that was the natural state, which is called free banking, hasn't been talked about for a very long time, but I think that's what will start to come back. But eventually, in the 1800s, the Peel Act was put, and this one currency got brought out. I think that's going to, central bank digital currencies, that's going to be normal. They're already experimenting with it. Banks are already rolling them out like ANZ, and I think there's going to be some more movement right now that's about to happen in that space. So I think what that's going to do is reduce transaction costs. So overall, what does that mean? If you can move money faster, if you can receive money faster, what essentially that does, it speeds up an economy. If you're not waiting for money, you wait 2 days, you wait for the weekend, your money has to come, that slows down an economy. It makes it slower. When we had paper and we went to the bank and those kind of things. So if the economy moves faster, right, so we're going to get used to that. If you don't receive your money instantly, right then and there, it's going to be weird. You'd be confused by that. So businesses will start up faster, businesses will rise faster, businesses will die faster. I think the entire system will go even quicker than we see today. Startups come, raise money, list, do crazy things, and then die and fall out in that 10-year period, and so it'll get even faster and quicker because you've got these opportunities that are going to be arising, and people are just going to be like, look, that's got to be one of the next things. I think what you've got as well, let's go back in history as well. Let's go back to, say, after World War II. So if you look at those times, 50s and 60s, you've got great times of growth. It was one of the greatest times. Everyone had a washing machine, everyone had a front yard, everyone had like a picket fence. It was like a great era. And I think you've got that, we've got this pandemic dip, we've got this upcoming, and I think you're going to see in the next 10 years incredible innovations, new growth, and we're going to see prosperity, particularly in Australia. I think it's well placed globally as well. The world's become a lot flatter. Like the distance between countries used to be a problem for Australia. Now everyone's on Zoom, so everyone's in New York City, everyone's in London. We're all on the same Zoom, not Zoom. I'm not saying I'm like into Zoom or anything like that.
It's on camera, you said it.
Yeah, I didn't mean to do, not a shareholder. I think that's a factor, right? So I think we're well placed in that sense, and we have some incredible, I think this is what we're about to see. Second generation and third generation entrepreneurs in Australia will be coached by those second and third generation, right? So the new entrepreneurs coming out will be coached by the second and third generation. That didn't happen before. So you go back 20 years, like which entrepreneur had made a big company, big startup in Australia, and then they could go and coach someone? Like there's very few that were not seen like that. Like in America, you've got like generations of entrepreneurs. Like you've got the Packard, Hewlett & Packard, you've got Atari, you've got Texas Instruments. All of these companies which birthed like these new industries, Intel, Nvidia, all these organizations came out of and were coached by entrepreneurs that had done things and gone through journeys. And I think in Australia, we're about to see that golden era where great entrepreneurs will be able to be coached and have the counsel and guidance that we didn't have before. It's very unknown for an Australian company to go overseas and have any idea really of what's in the industry, what's natural, what's normal. And so that, I think, again, will add another layer of defence. I think, Apurva, like you said, like this regulatory aspect and Australians taking risks, I think it will take even more risks. I think we're going to see Australians swing even harder, go for more swings, go for more attempts. And you're going to see that from this nascent VC industry in Australia, which I think America's VC right now is a little tight. I think Australia's VC is quite loose still. It's got like, it's just sloshing in cash, and they didn't have anywhere to put the money, so they're all cashed up and they're waiting, and so I think they're going to take some punts.
Okay. Vanessa, do you see it the same way?
Yeah, I don't know if the golden era after World War II was that great for 1950s women, housewives. That's the only thing I disagree with. No, but look, I was going to joke and say I haven't seen the Black Mirror episode that talks about the future of finance yet, but I think it's interesting.
We're writing it today.
Yeah, I know we are. I think it was interesting what you're saying about the whole instant payments thing, and what came to mind is how Ray-Ban launched their Meta glasses a couple of years ago now, actually, but a couple of weeks ago they announced that, you can have your WhatsApp messages like through the glasses as well. And then while you were talking, I thought, can you imagine? We went from banking on a mobile, banking to the watch, and then banking to glasses. Wouldn't that be like quite a futurist way to look at it? But culturally, and you touched on it earlier when you said Australia's embraced fintech, but they've not embraced climate change. And I used to work for a youth brand, and I know how much climate matters to the next generation. So if the fintech leaders of today are nurturing the next generations, I expect that it won't be long until we start to see in our space that green movement come to life.
I think that'd be great and certainly worthy. Apurva.
Yeah, from where we see it, there are a few additional trends that I'd like to point out. So one being, and the more important one being, I think what's happened in the last couple of years, post-COVID, most central banks giving a lot of liquidity to individuals, we've started to see what we call increased participation in complex finance. Up until recently, there was a higher degree of faith in financial institutions and systems. And I think in the last couple of years, the Wall Street situation, right, the superheroes or the Robin Hoods of the world, they've opened this portal for an average user to be able to dabble into financial instruments that up until recently they had an arm's length distance from, right? They would happily just go into an ETF, buy something, let it sit, never really know what the distribution of stocks are within that ETF and just make money. And that's what we were taught by our parents, right? If you're not into this, stay away from it, play it safe. Crypto, And I'm sorry, this is becoming increasingly a crypto. That's what we live in.
Well, we're talking about the future of fintech, and certainly that has a place.
Dabbling in crypto is another example. I think the entry criteria and why crypto is hard for a lot of people, I often say this, it's not a bug, it's a feature, right? The entry criteria for crypto is you need to educate yourself a little bit about finance. And that means you take better control of your money. That means you live in a more trustless society. And that's not a bad thing, actually. You just don't take anyone's word for it. You do your own research, right? And that's a good thing. Because the version 1 of finance that has existed in the last 200, 300 years of modern globalization, in some ways is starting to come to an end. And it's a big macro trend. It's beyond our lives, right? You trusted in institutions, you trusted a handful of people to make decisions for you, and you realize that it's not necessarily yielding the masses in any great way. The asset owners are the ones who are getting richer, and that's why you're seeing a macro global distribution of wealth not done properly. So in the next 10 years or so, you're going to see more and more people in a macro way participate more into finance. There'll be tools and startups and fintechs that are going to play a big role in doing that, because that's what we talk about, the whole democratization of finance. And at the same time, I think we're going to start seeing blockchain-based finance becoming more established, as Fred pointed out. Regulations are going to come through, and that's going to help it becoming less of a sort of Wild West. There'll be more trust based into that system. And we often get asked, is blockchain the future of finance? It's part of the future of finance. I don't think it's going to destroy the banks. I think banks will have more acceptance towards it. There'll be a share that will be taken. There'll be a space that it will create for itself, and that will create more options for everyone who's been sitting out of the financial revolution.
Excellent. So we've talked a little bit about, let's say the banks were FinTech 1.0. Let's say we're somewhere around FinTech 2.0 right now, and we've been talking about FinTech 3.0. It's an iterative process. So let's have a little debate. Just want to read a few things, and I want to see what your reactions are as to whether these are good things, bad things, or not good or bad things. So
it's like fast money.
So we've seen Volt surrender its license. Zip pulled its merger with Sezzle. Latitude rescinded its offer for Hum. Klarna's latest raise shows valuations are being squeezed. We know that's happening certainly in the US and here. Are these good things? Are these bad things? Or something else? And it's not just these things, but those are examples.
My initial reaction to that is it's bad for people who are going through it, of course. 2 seconds of silence for that. But I think for the broader space, I think this is exactly what should have happened from the very beginning, right? There is a self-correction mechanism where you don't fight gravity, right? If something is not working, it should die, albeit in a controlled way, in a way that no individual is too disrupted by it. But we, in the last few decades, created systems where we artificially kept things alive that should have died a long time ago, including systems, including processes, and a whole bunch of institutions. So this is part of the self-correction, and we are seeing that. As Fred pointed out, Celsius. If it doesn't work, sorry, it's bad for our industry, but this is a great example where a science experiment didn't work, and learn from it, move on, create a better system. And that's what sort of progresses humanity in some way.
Okay.
So that's
anybody have a different view?
No, along those lines, right, it's hard. Like, we're in a highly regulated industry, and kudos to anybody who tries, because like we had a lot of friends in those businesses as well, and that was a hard day for all of us. But yeah, to your point, when we take a step back, the best we can do is learn from it. And I think there's been a real change or a real shift where growth at any cost is not an okay mindset anymore. Like, profitability is important, efficiency is important, and just revenue chasing at any cost is just not okay. And I think that's the biggest lesson that we've taken from it and made sure that it's core to our business. And I think strategy matters as well, right? Like, your North Star matters, your principles matter, and Andrew, our co-founder, he often talks about how you get there is where you are nimble, is where, as a startup, you should be flexible, you should learn, you should pivot, you shouldn't have pride if something's not working, but understanding your strategy, understanding that profitability matters, and understanding that it's people that get you there are key to making sure that we survive the correcting of what's going on.
Excellent. Just because of time, I want to switch over and make sure we can get some of the audience involved here, both virtually, for those of you who are listening or dialing in from another city, or in the audience here. Let's open it up to some questions for our panel. Who wants to kick it off? Any questions? We'll ping pong back and forth between the folks who are dialed in and the folks in the audience. Thoughts, questions, challenges? There we go. If you could just let us know your name before you ask, that way we know who to yell at later.
It's fine. Hi, it's Ash, everyone.
Hi, Ash.
It's more, given the conversation we just heard, a few thoughts came to my mind. Given the context for this question is Australia's geopolitical location, and what sort of you guys see how Australia adopting in the next 10 years in this region from a market point of view, and how Australia actually plays a leading role in developing those markets, because we're not close to the developed markets, we're more aligned with emerging markets from a location point of view. Any thoughts on that? I would love to.
What role does Australia play? What responsibility do we have with emerging markets?
Let me just add it on a little bit. Australian fintech, actually.
Yeah. That's a hospital
My
pass.
geopolitical knowledge is low, so I can't comment on that.
Okay.
I think, generally speaking, they're very different markets. What works in Australia doesn't, I've found, or what we've noticed, we have an office in the Philippines and Singapore, and they're not the same. They have different ways of doing things. They have much more inherent micropayments and smaller size transactions. You've got loans which are much smaller size as well, and they have bigger impact. There are whole markets that don't have credit scores, so it's hard to lend, I could imagine, from a digital home loan perspective. And there are entirely different lending systems as well. I think that context is quite challenging, going and engaging in those markets. And it's the same with any technology. I think it all starts with the idea. So if your idea is shaped for the Australian market, it's going to be tough to move to different countries. But if your idea is more based solving a human need, you need to go down Maslow's hierarchy and into areas where you're getting from A to B, or you're borrowing money or contacting someone, these are foundational technologies and foundational problems. And then I think you have a bit of an easier time. I don't know I'm going to just bail. I don't know what our responsibility is. I'm not the best at that, but I don't know if you can answer that better than me.
Well, not that I know the exact answer, but the geography in fintech, I don't know if it really matters that much, especially the more we think about blockchain finance, right? Most blockchain finance businesses at some stage start thinking global very quickly. Our co-founder and CEO is currently in Turkey, and we're starting to look at Europe as maybe the entry into Europe as one of the next markets. So I think in the fintech space, the regulatory environment. Closer? All right. In the fintech space, you're closer to other regulatory environments, right? So in some ways, we mimic a little bit of the US and a little bit of the Western Europe markets, right? So if you're building for Australia, you can quickly change the flavor a little bit and actually deploy your product in other global markets that have similar regulatory processes and requirements. What's interesting is you do get access to talent pools in the Southeast Asian market. So I wonder whether that's the advantage we have, where while we are in time zones where we can get access to relatively affordable talent, because the cost of living in those countries are lower, but really build products that actually serve a very high cost of living market, and therefore your margin. So maybe the role then is to provide employment in cutting edge technology in some of these markets. That's just one of the hypotheses.
The only thing I'll add is I talked about how Nano's got plans to go global at the end of the year, and to some of the points that you were making before as well. We're not going global and thinking we're about to be the lender of record in the UK or the US or Canada, because it's a highly regulated and we couldn't afford to, or physically wouldn't be possible to lend in those markets. But what we are trying to do is solve that basic need, which is there's pain and frustration felt by all borrowers when it comes to purchasing a home. And the oligopoly that exists in Australia is true in those markets as well. And they all sit on old technology stacks that need to be improved. And that's where we see our sweet spot, because we can ingest any brand and any product requirements into our origination platform. And that's where we feel is our kind of opportunity to take Australian technology again and make it global.
Thank you for your question, Ash. We've got one that I want to read out from the audience. I'm not sure, this is anonymous, so I'm not sure where they're dialed into, so we'll find out. The big four banks continue to swallow up other banks and fintechs. We saw this with NAB and 86400 recently. And take, well, ANZ and Suncorp, for example. How can the fintechs compete in this environment when the big guys can just buy out the little guys?
We're trying not to be bought because we're partnering with them, so that's our big goal. And it's interesting, I was doing a contract at MLC when NAB bought 86400, and there was a massive town hall, and at the time, IOOF had bought MLC, NAB had bought 86400, and when they were presenting about all these big macro shifts in the business, they said that the 86400 purchase was a lot harder to get approved than IOOF because, and it comes back to the points we were making around how much value is invested from a regulatory perspective in the fintech space. We don't want to see the little ones go away, and that's what caused them like greater scrutiny. So our answer, we're partnering with them, we're empowering them, and I think you were making the comment before that on e-commerce and retail coexist. That's how we see our role in the space.
Okay.
I just add, we think of it slightly differently. Fintech can keep producing and let the banks keep eating them to the point they can't eat anymore, and then fintech wins. Right? So I think that's the level of innovation we will come to. So it's fine, let the banks keep signing checks, and then the founders of those companies will sell and then leave after a point because corporates are boring, and then go ahead and build the next startup using that money and so on and so forth.
I hope you are right. I think that's the best vision for a future we could have come up with today. Brilliant.
The only thing I'd add is, so if you look at any major, like when something gets really disrupted, you need a major shift in technology that they can't quite capture. I know we're talking about blockchain and cryptocurrency, but I genuinely think that's a really hard one for banks to swallow because of the AML and the KYC, and you're essentially upheavaling their SWIFT system. Like that's like, you're talking like deep government, like risk teams, thousands of people like going no, and then you're going to try and have to get that live, like no chance. That's why I think, so something like that, and that's why I think Apurva's business is great, because we need a bank that is sovereign and not tied and not going to get swallowed up. We need some competition. Competition is great. It fuels economies. It makes us better. Imagine there was a global Australian bank. It'd be incredible. Most global banks come out of the UK and America. And I think we need to ride on something, and I think normally it's probably going to be somewhere around some sort of new technology that's very counterposition or extremely has structural inefficiency inside the organization that shuts it down. So it's, oh, that's crypto, shut that down. And there's active teams of people probably shutting that down. That's going to take a long time for the bank to pivot and adapt.
Excellent. I can see the global bank in the metaverse being Australian. We can work on that. I think we are just about out of time. I have a few more minutes.
Hi, Alex from ITY.com. I love the metaverse, and I always like to ask executives what you think the metaverse will be like in the 2030s when AR and extended reality glasses will be as commonplace as smartphones and tablets today. But we also have, somebody mentioned the Black Mirror episodes. What happens if one of those episodes becomes real? Central bank digital currency becomes mandated. Although we have El Salvador allowing Bitcoin to become legal tender, if a future authoritarian government decides to ban various cryptocurrencies, mandate their central bank one, and those central banks can switch digital currencies off. You only will be able to spend your money on this or that or something else. And we already see that in China with credit systems where you can't buy plane tickets. That was a Black Mirror episode that came real. And there are bank runs in China right now where certain banks are not letting you take money out because of scandals. And they say they're going to let you take the money out. And there were huge queues just in Sydney, just yesterday, down in Chinatown, as people tried to get money out of Chinese banks. So what's the risk of that coming true? I hope it never does, but that could be the next 10 years as well.
We have a central bank digital currency right now. We're all using it. They control all the exits, all the doors, all the payments, all the rails. That's what we currently already exist in. So I'm not really scared of Black Mirror. Black Mirror is a really good fantasy dystopian reality where potentially things go off the rails. And things go off the rails and have done in human civilization all throughout time and tend to come back on the rails as well. although there was dark periods, but anyway, that's a whole other thing.
Humanity does muddle through.
Yeah, we make it through. We carry on, we survive. That's one thing we do really well, is we adapt. And any particular thing that does shake us, it makes us stronger as well. That's the Lindy effect as well. One of the things I think that's interesting about Bitcoin, as much as we would love a government to try and shut it down, I just don't back the chances. That's like playing whack-a-mole. That's why they haven't shut down BitTorrent. Like BitTorrent is still rife. You can, whereas, I don't know, borrow friends' music.
Let's just leave it there.
So much. My submission is in this metaverse. So we had a metaverse before with Second Life. I think lots of metaverses already exist. Like playing Doom 2 with your friends is a metaverse, except the currency is, I don't know, death, killing other people, you're in the game, I'm not, whatever.
So reality.
Yeah, reality-ish. No, let's not go with that. So this is one thing I think, if I was going to put a principle out there that I hope happens, the internet is free. And there was a petition early on the internet for it not to be free. You'd have to pay to go on the internet. That's an important idea and a very interesting one. I'm hoping that the metaverse or metaversi, or what some people are calling multiple versions of the metaverse, that's a whole other thing. I'm hoping it's free. And just like the internet is, and that's the one thing I hope we carry on and bring from the internet that we learned this time and we bring to the metaverse. That you're free to do things. Obviously there's certain things that may be negative and there's consequences and we'll learn from that. But I'm hoping, just like with crypto, we have that decentralized, open and free attitude. And in the internet, we have the same thing. And that open source, that there's a beauty to that everyone has access to this information. I'm hoping that's what happens in the metaverse.
Good answer. So I'm afraid we have to end the conversation, at least the formal one there, because we could probably go on all day pretty easily, but we can stick around a little bit afterwards if anybody wants to continue some conversation. So I just wanted to once again thank our panelists and thank our sponsors as well, 1835i and Chartered Accountants. Really appreciate the support to get this off the ground. You all may have at this point received a little ping on your phone.
Mike, I'm sorry. Can we just... these guys are sponsoring this. What does 1835i do? Is it small plug because they've brought us all here? Is that okay?
That's great.
I just don't know what that business is, and I hope everyone value and appreciate that.
Fred, we love you. We're talking.
Yeah. Wait, come here.
Oh, this is unexpected, but lucky I wore the T-shirt for this. So hi, I'm Caitlin Stonehouse-Penny. I'm head of comms and investor relations at 1835i. The question at hand: we're actually ANZ Bank's external innovation and venture capital partner. So we spun out of the bank late last year and really setting ourselves up and getting embedded in this ecosystem because we really are committed. There's a lot happening with partnerships with banks and we really want to play that middle role between the community and someone like ANZ, which is such a well-known and established brand in this country. So thank you, but that's who we are.
Nice. And lastly, I just wanted to let everybody know we have spammed your email or your phone just with a quick survey. It takes less than 2 minutes to fill out. Helps us figure out if these are going the way they should or we should do more or less of something or do something differently. Feel free to be honest. We appreciate feedback. We think of feedback as a gift, so please give generously. Once again, thank our panelists, but I also want to thank you all for joining us, both virtually. If you are here in the cloud, we thank you for your time and paying attention. And if you're here in the audience, we're thrilled to see you. And it's great to have human beings in 3 dimensions in the same room again. So thanks everybody for coming.